School is back in session and September is College Savings Month. Both are reasons for parents to turn their focus to saving for college. And any time of year is a good time for Michigan families to start building a savings account for their child's higher education. That's the message from Robin Lott, Executive Director of the Michigan Education Trust, or MET for short. And Robin, of course, is here right now. Thank you for being here today.
Good morning. Thank you.
And today you're going to discuss saving for college in general and the benefits of MET, which is Michigan's prepaid tuition plan.
Correct.
So first off, can you give us a little bit of background for those who have never even heard of MET?
Sure. MET is the Section 529 prepaid tuition program. It allows parents to save for tuition and mandatory fees for a student that may attend a Michigan public college. It's also portable for them to go out of state, but the primary focus is tuition and mandatory fees for a child. Very much like an insurance program.
Okay. And you mentioned it's a 529 plan. What does 529 mean?
Sure. 529 is the number of the Internal Revenue Code that gives us some great tax advantages and tax benefits to families that want to save for college. And so it's sort of the motivator, if you will, to get people to save. It gives us the state income tax, the ability to offer an income tax deduction. It also allows for our funds to grow tax deferred, and then the earnings are tax exempt if used to pay for qualified higher education expenses. You don't pay taxes on the earnings.
Okay, so the Michigan Education Savings Program is the state's other college savings plan. What's the difference between that and MET?
Sure. Think of MESP as your 401k, if you will, for college savings. It's very much like a 401k plan in that you are investing your funds. And so you have a little risk depending on the level of risk you're willing to take, but your savings account at the end of the day can be used for not only tuition, but it can be used for room and board or fees or books, you know, so pretty much all of the other expenses other than tuition. But it could also be used for tuition. Works very well with the MET program. So MET, think of MET as your tuition piece, MESP as your bucket to cover the other expenses.
Okay, so obviously the key benefit of MET is that it protects against future increases in tuition.
Correct.
What do you predict, or what have you heard that is predicted to happen with tuition costs in the future? Just keep going up?
Well, in Michigan, we think it's going to continue to rise. Fortunately, it's been pretty steady the last few years with the help from the Michigan legislature, but we expect that it will continue to rise. The question is how much? We're not sure. On average, it's been going up about 7% overall. So we've seen tuition almost quadruple in the last 20 years, I'll say. So I just think it's going to keep going up, so we need to further minimize the amount of student debts that the students are going to have to take out. Financial aid sounds great until you realize that the majority of the package is student loans. And so they're borrowing and then they have to pay all that money back plus interest. So whatever the student can have in some savings will minimize the amount of loans they have to take out.
And of course, MET is so beneficial. Talk about some of the other advantages to using it to save.
Using it to save, you're going to get the state of Michigan income tax deduction on the total amount of your contribution. So in a given year, if you were to, we'll say, deposit $10,000, $20,000 in it, you're going to deduct that entire amount off of your state of Michigan income tax.
Wow.
And that's going to be very, very helpful. When that child attends college, no matter where they go, you also will not pay tax on the earnings portion of that as long as they attend college.
So MET recently introduced the pay-as-you-go option. What's that? How does that work?
Sure, it's a new option that we're seeing a lot of interest in. Allows you to purchase 1 credit hour at today's cost, open the contract, and sort of keep it as an open contract. Allows you to deposit money, minimum of $25, but any amount above that at any time you wish, at whatever the published price is when you put it in. So from now until September 30, you can make that open that contract, if you will, with a 1 credit hour purchase, and it locks you in.
Wow, so MET contract sales have increased significantly since last year.
Yes.
What is the reason for that?
We think that, well, we love to always say it's because of our marketing.
Yeah.
we know that that is a major component, and the fact that staff are out and talking to everyone, but we do believe pay-as-you-go has been a very big, or has made a big impact on it. And we've seen like 58% increase in enrollment this year, and of that, 31% represent the pay-as-you-go contracts. It's more flexible, there's no commitment anymore, so you don't have to commit to a monthly plan.
Wow.
Yes.
Very works well for everyone.
Yes.
And what college expenses can MET funds be used towards?
They can primarily be used for tuition and mandatory fees. If your child receives a scholarship or a partial or a full scholarship, they can be, the MET payment can be applied to room and board. So very flexible, but the bill has to be based on tuition and mandatory fees. Mandatory fees being those fees that all students must pay for, regardless of the type of class or the number of credit hours. So it does not cover lab fees, for example.
So would this still work if a student decided to attend college out of state?
Yes, it would still work. They get a refundable amount that we pay directly to the out-of-state college or university, and out-of-country counts as out-of-state, so it doesn't matter whether it's abroad or within the states.
Which is great.
It's very great.
And what would happen if a student received a full scholarship?
Full scholarship is also refundable. Now, there's also the option to transfer the contract to an immediate family member. So if there's another child in the family, or now you have grandchildren or nieces and nephews, you could transfer all or a portion of the MET contract to that youth or individual, and they could use it for college at their expected college graduation time.
That's great to know. And what about parents who might feel overwhelmed about saving for college? I mean, it's a lot to think about. What advice would you give them?
I would say just do what you can to open it up and get started. It is so easy to get it started. It probably take you 20 minutes. Get the social security numbers together, open the account. If you do a 1 credit hour at community college, we're only talking $109, you know. I probably spend that, I don't know, on gas or, you know, stuff that, you know, you could probably do without $109. You could find it just to get it started. And once you get it started, it's amazing how much it will grow. Obviously, the earlier the better, but it's never too late to begin a savings plan either, because whatever you save can be used towards the child's senior year in high school, or senior year in college, I'm sorry.
So if a parent has not even started saving until now, they still can, right?
They still can, that's right.
Just take that first step?
Take that first step, go online to the setwithmet.com website and get started today.
Great. Anything else you'd like to add before we go?